Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2025 President's Council sponsors. And these are companies that provide a tremendous amount of financial support to our association, in large part so that we can continue to be that strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Consolidated Analytics, Funding Shield, Guild Mortgage, Rocket Mortgage, Wiener Brodsky Kiter, and Western Alliance Bank. Thank you all so much for your support this year. Just starting out our legislative session, so I can tell you I'm already very grateful for your support this year because it's going to be a long year. And with that, I'd like to welcome today's guest. I'm very happy to be welcoming Paul Gigliotti, who is Head of Growth and Partnerships at Prudent AI, also a member of my board. Paul, welcome.
Thank you, Susan. I'm thrilled to be here with you.
You've been on Connect before with some other board members talking about some specific initiatives, but I don't know that you've been on just you and I. So I always get started with just a kickoff question. How did you come to the mortgage industry? It's always an interesting journey. So why don't you tell us about yours?
Yeah, it is an interesting journey. It's not one of I went to school to get into mortgage lending, right? Like the typical work. It was a really interesting career path for me. I was in accounting. I was like a book nerd, balancing GL accounts, and I felt really stuck. And I knew a friend of mine who was a branch manager in production in mortgage lending. And this person looked at me and said, "You should get in sales. Like people will really trust you. You'd be amazing at sales." And in my head, I thought, I can't, what are you talking about? Sell? I balance GL accounts all day long. And then it turned into, getting licensed in the state of California with the DRE, getting an MLS license, et cetera, and hit the ground running as an originator. And like most people in the industry, once that happened, it's in your blood and you just can't leave. So here I am still many, 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 I'll even say decades later and loving every minute of it.
Yeah, it's once you come in, it just there's nothing else you want to do. So I'm
Right.
I thank you for sharing that. This is one of the things I wanted to talk about today because I've seen in the years I've had this job, this kind of comes and goes as kind of an ebb and flow. So why is the non-QM market becoming increasingly critical in today's lending landscape? And how are you seeing them scale the non-QM operations? Because it's different than traditional lending.
It is different than traditional lending. And I think that's why it's becoming so important. So if you look at well, let me start by saying, we at the end of the day, we service consumers. And we all know, regardless of what industry, the consumer's needs are constantly changing, especially in today's ever-evolving world, right? And so what we get to do with the non-QM products is we get to look at products that support that ever-changing consumer. There are some really interesting stats that I stumbled upon and shared with our team at Prudent AI. 37% of American homeowners have a side hustle, gig economy, fractional work that makes up,
37%.
that's a huge percentage if you think about it, right? And that 37% that work in a side hustle gig economy, that money makes up for 20% or more of their monthly income. So if we're looking at home prices on the rise, interest rates on the rise, insurance on the rise, that 37% are going to need to find a product or a solution that can include that 20% or more of the income for qualification purposes.
Mhm.
Now, so to answer your question, I think where the need for the non-QM products are coming into play is because it's flexible. And to me, that the terminology non-QM, I'd love to see that removed because that means non-qualifiable mortgage. That's not the case. It's just expanded guides. And so it's becoming more and more prevalent in the landscape that by 37%, that, those expanded guide programs or non-QM programs are needed. To answer the second part of your question, um, it provides it's more work to qualify for a non-QM program because the guides are expanded. So
Mhm.
you're looking at individuals who have more complex tax returns, a lot of additional schedules, self-employment. You're having to bring together maybe bank statement income along with the W-2 income as well as the self-employment income. So taking a look at qualifying based off of income and assets then becomes a much bigger scope, and and the work itself is more tedious. And when you get into work that is more tedious, then also we know what happens with that is there's a higher rate for mistakes to be made in calculating that income. And so it's a program and a solution that's needed to support the consumer of today. But we also need to look at different ways of providing solutions and tools to make sure that those programs are being underwritten in a very efficient way.
The AI is just in every aspect of what this industry is doing. I'd be interested to hear from you. How is AI transforming the traditional lending qualification process?
Yeah, that's a great question. And oh my gosh, it's crazy because by the time I make this statement or this podcast is over, it's going to change with AI. It is mind-blowing when you sit back and look at how quickly things are moving with the integration of AI as a solution. What I will say, what's astounding to me with AI, and this is my first role at Prudent AI in selling a solution or participating in a solution that's artificial intelligence. But what's amazing to me, Susan, is that you have the ability to scale so much quicker when you're building out a technology solution as opposed to a technology program. Because with technology programs, as you know, you use a multitude of programs running the California MBA. And when there needs to be a change and when you need flexibility in that program, it takes a long time for those customizations to be built out and those integrations to be built out. So first and foremost with AI, because it's not a software, it's a technology, the adoption and change and customization to it is pretty seamless. It's really quick. So what that means, if you're looking at non-QM programs, we all know, and most of the people listening to this awesome podcast know that the non-QM guides are open, right? So they're much more expanded than the agency guides or QM guides, and so the guardrails are kind of off. And investors that purchase non-QM loans can look at different compensating factors. So with the ability of AI having as much flexibility as it does, and with the work of knowledge-based and Gen AI, which learns as you're using the solution more and more, it gives lenders the ability to qualify this consumer based on a much wider parameter or without those guardrails involved. So you could take a look at a consumer who needs to get approved with a 24-month bank statement, two accounts. So that's two accounts, 24 months bank statement, and you're going to use certain deposits to qualify as income because it's a self-employed consumer. That could take an underwriter anywhere from 4 to 5 hours to go through those 24 months of bank statements,
Wow.
look at all the deposits, um, take a review of the bank statements and make sure that there's no tomfoolery going on with the calculation of the bank statements. There's no fraudulent activity, and do the calculations as to, which income you're going to be able to use or which deposits you can be able to use as income. Or you could take an AI solution like Prudent AI and have the same amount of work done in less than a minute with 100% rate of accuracy, also while viewing fraud and risk.
Right.
So the time and efficiency, it comes way down to nil. So that really provides the ability for scalability up or down with the ebb and flows of our industry. That's just one example of how AI itself as a solution can support, on topic, non-QM underwriting and credit worthiness, if you will, of the consumer.
Right. Yeah, that's fantastic. And it just continues to blow my mind, all the things that we can do with AI. And you're right, it's just on and on and on. There's more and more things. Every week there's going to be something new.
I know, it's crazy. It's crazy. We got to keep up with it, though.
How are lenders currently handling complex income scenarios and kind of like what bottlenecks it might exist? Like you're describing some complex income scenarios, right? Because you're saying 37% of households have a side hustle, which is a pretty amazing statistic.
Yeah. So I think that, I think lenders right now, I think what our industry is doing, all of our peers out there that are working in at lenders, IMBs, brokers, credit unions, lending any type of money. I think a lot of them are sitting back and taking note of that statistic that the consumer is changing, right? So, I think they're starting to open up their eyes to looking at a variety of programs. We've had a multitude of agency shops come to Prudent AI and say, we need to start doing non-QM. We need you to help us expand into the non-QM business because we don't have the workflow for it. And so since you're doing AI and you have solutions for it, we want you to come in and support us. So from that perspective, I don't have any statistics and I don't necessarily want to share lender by name, but from that perspective, what I'm seeing is lenders are quickly moving to the consumer's need. And I will say, because I've been in the industry for a hot second, they're moving quicker than I've seen them move before. And that obviously is attributed to every lender sitting back saying, how can I get production in the door? And I think a lot of them are noting that there's this change with the consumer, and that change, you know, Fannie and Freddie, the GSEs do a great job of expanding as much as they can, but there's only so much that they can do. So I think a lot of the lenders are sitting back saying, we need to bring in some non-QM business. I know that there was even conversation, I believe at Western Secondary about non-QM and, and the,
Absolutely.
and the movement, right, towards more products coming out for the consumer. That was back in August. So we already saw trickles of lenders raising their hands saying, I need to figure out this non-QM, how it works. But with that, agency shops that are not used to working with non-QM products and those non-QM products like, Next Bank and Luxury and Angel Oak, they realize that there is complexity to it and that although non-QM loans have a uh, lower risk in default than agency loans, which is also surprising, but that there's more complexity and you have to you have to go through the income and the assets with a higher level of due diligence because it's not a straight here's a W-2 and here's a
Right.
paste. It's not easy math. Um,
Right.
and I think that's where solutions like, and I'm not going to boast Prudent AI throughout the entire podcast. There are other solutions out there that do the same thing. What's important is to really make sure that you're paying attention to the technology that the solution is run off of. And that's where you get a great lift. So there are many solutions out there that run OCR, right? And that's just a data scrape and then a revert of what was scraped. But then there are solutions that run AI, and where you get the huge lift with AI is that intelligence portion. The solution is actually learning what the user wants as it's going. It has a mind. It can remember what it is that you want. And so after the third or fourth time of correcting the solution, the next time you go in there, you won't need to make that one specific correction because the system has learned that. So I think the industry is making a sharp turn away from OCR technology into the AI technology, which in itself, if you think about it, that educational piece will also help those who aren't 100% proficient with guides in calculation of income in the non-QM space.
Right. Definitely a market where lenders are looking for more products to offer. And, products like Prudent allow lenders to have some confidence in moving forward with adding that to, adding that to their product line. So thank you for giving me that information. It continues to boggle my mind all the ways that AI is improving, providing credit to borrowers to become homeowners, especially in just for our little part of the industry. But thank you for being on today's podcast. Paul, you're a board member. You have also hosted multiple times our big Mortgage Innovators Conference, for which I know you're very passionate about. You're still a big ambassador for MIC. We're going to be looking. We'll be at that event before you know it. It's just the beginning of May at our beautiful new location in Huntington Beach, so I'm excited about. Can you share with our listeners why this conference has grown to be one of the favorite tech events in the mortgage banking industry?
Yeah, absolutely. And I will say, I'm going to backtrack for 1 second. It is inspiring. You and I spent some time at National MBA and IMB, and it was so great, not only hanging out with you and walking around and talking about MIC, but hearing people actually coming up to you and say, tell me about MIC. I've heard about it,
Right.
I
Yeah,
want to learn
that was
more.
good.
Right? It's so great to see. I mean, you created this conference in your head, and you knew what you wanted it to be, and you're there. It's the conference that provides the lending community and the solution providers a venue where they have the ability to grow and they have the ability to expand. So first and foremost, what always attracted me, from the very beginning onward about this conference is it's a conference around innovation. Now, innovation is driven by technology, but there's much more to it than technology. Technology is the tool for innovation. And you've always done such a great job with me as a co-chair with Margaret and others, and now with KP and Ike heading it, of ensuring that the audience sees the innovation, they see what that
Yeah.
tool can do. And I think first and foremost, that's what makes the conference stand out from the other technology conferences that are out there. And to me, that's one of the most important. Secondly, what I'd like to add to that is the conference is there to support the lending community. And I think that a lot of technology conferences out there forget who their audience is. And even in the downturn in the industry, the California MBA led by you was very steadfast, and this is for the lenders. And if people are having a hard time for budget purposes, or not, it's going to be free. We need the lenders there to ensure that they know that this is created to support them. So if you're constantly focusing on innovation and growth, and you have a constant focus of who your audience is, it becomes a win-win, right? And so I think those are the two things that stand out to me, the level of importance of this conference. I only see it growing and expanding. And I have to say, it's one of my favorite conferences out there.
Well, thank you. We're very proud of the Mortgage Innovators Conference. And yeah, I think that we've been able to keep that high lender to vendor ratio because lenders come for free. So if you're a lender listening and you'd like to join us at Mortgage Innovators, contact us. You can contact me directly, Susan@cmba.com, and I'll get you registered, and we will see you in May. Paul, thank you so much for being on Connect. It's been great.
Absolutely. Always a pleasure to talk with you, my friend.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.